It's another one of those mornings where I woke up pretty early and decided to, my brain just got working. So I'm here in my bathrobe again, which is quite interesting because so many of you guys comment, where's the bathrobe? So who knows? Maybe I don't need to get dressed anymore for doing these videos. So listen, today I want to talk about something that's quite interesting. It's going to be interesting moon boy math that we're going to do right now. However, I think on the grand scheme of things, it could be less moon boy math than we all think. So while it's going to sound crazy, I want to implore you to come with the mindset that we have never in humanity seen an asset with finality of supply ever before. So I was thinking about it, I was like, well, this ETF is coming at some point, right? There's going to be a GBTC versus the SEC decision. There's going to be the BlackRock ETF. There's going to be something. I think we are going to get a spot Bitcoin ETF by the halving, right? And I think there's a high chance that that could be 2023. So I started wondering what could happen to the price of this asset once you get an ETF, considering it's not an asset where you can just start getting more of it, right? And you've just now unlocked the biggest tap of money that the asset has, which is the ETF. The ETF is the biggest tap of money for Bitcoin. I know there's a lot of people that are talking about, oh no, we need real people to hold Bitcoin and normal people to hold Bitcoin. Cool, you're absolutely right. I'm not talking about anything that $1,000 net worthers think about in my videos, right? There's lots of other great videos for that. No worried about that. I'm talking about the main capital in the world. Where is that going to move from? How is it going to move? And the most efficient way for it to move is through an ETF. It's also very, very smart for businesses to hold the ETF. It's also very, very smart for high net worth family offices to hold the ETF. There's just less thinking involved with holding an American ETF than anything else. So yes, while everyone's talking about I want all the people of the world to benefit from Bitcoin, I agree with you. That's not my focus. My focus is when does the capital start moving into Bitcoin? Because a nation with 40 million people all putting in $100 into Bitcoin is cool. What's cooler, what's cooler than that, in terms of getting to the next point, is going to be when someone goes and puts in $400 billion into Bitcoin in one hit, like a sovereign wealth fund or a government or something like that. That's cooler by my focus. There's enough people out there in the world focusing on the 40 million people, put $100 in, et cetera, et cetera. That's why I always say the rich people of the traditional asset class need Bitcoin more than poor people, but poor people need Bitcoin adoption more than rich people, because Bitcoin adoption allows you to start saving your energy, actually allows you to start focusing on what do I want to do with my spirit, what do I want to do with my time, what do I want to do with my life, and it works as it should, not you having to become a speculator in order to do that. So that part is being taken care of through adoption. But adoption cannot happen until the asset has a lot of capital in it, because it cannot be trusted, right? A government can much more easier trust an asset that has a market cap of $50 trillion than an asset that has a market cap of half a trillion dollars. So that's why I was wondering, like, how quickly can this capital come in and what effect would that have on the price? And I know a lot of you think about this as well, and that's absolutely fine. There are people who are looking at Bitcoin as a trade. There are people who are looking at Bitcoin as an earth-saving technology. There's lots of different ways to look at Bitcoin, right? So I was thinking about this, and I started to think about, okay, well, Bitcoin's a commodity, so it's more like a commodity, so let me go and have a look at what happened to gold. Because when GLD was approved, what happened to gold? That would give us an idea of what's going to happen to Bitcoin. And gold rallied 350% in the preceding 8 years after GLD was approved. 350%. And Bitcoin will rally harder than gold, right? And there's a few reasons for that. The top 3 reasons in my mind are actual finality of supply. You can't just mine more Bitcoin to match the ETF demand, which is what happened in the gold market, right? As soon as the ETF was approved, suddenly all of this mining, gold mining was approved, right? Because everyone wanted to feed the demand that was coming in from the ETF, and the asset still rallied 350% in the following 8 years. You can't do that with Bitcoin. Right? Number 2, the multiples are tighter. Gold requires roughly $1.6 to $2 billion, according to Bank of America, to move the gold market cap by 1%, because of the supply and demand effects of that. Bitcoin just needs $93 million, according to the same research. Think about that. You need almost 20x less demand going into Bitcoin to move the market cap by 1%. And that's today. That's not as more and more hodlers get created. That's not, because think about it, if you've got an asset and you bought it at $10,000 and it's now $1 million, it would be stupid to sell that asset, because you've got a tax event that's going to happen, and especially the buyers that are coming into the market now versus the buyers that have been in the market. And the buyers that are coming in now are much more sophisticated. I'm going to do a video, so please make sure you subscribe if you haven't already, on how I plan to spend my Bitcoin without spending my Bitcoin. So make sure you subscribe to the channel to see that. It's going to be coming up at some point this week. So you've got now people coming into the market who, if Bitcoin goes from 40,000, let's say they got in at 40,000, and it goes to $1 million, they never need to ever sell that Bitcoin ever again. And then when you've got the ETF coming in, it's even easier. It's so easy for me to get a stock loan against my SPY or QQQ position, and that's exactly what will happen to the Bitcoin ETF over the next few years once one is approved. So, and you get favorable interest rates. You're not getting your 11% interest rates right now, which is what you have to pay if you try and borrow against your Bitcoin through one of these Bitcoin-related companies. Soon enough, you will be able to borrow directly on Interactive Brokers or Charles Schwab or whatever else you use. You'll be able to take a loan against it, and it will be a market rate interest rate, which is what it should be. So, and the only reason they can do that is because they've got the ETF, right? There's no custody issues when it comes to the lender's side. So it becomes advantageous to tell people, hey, if you want to borrow against your Bitcoin, buy the ETF, right? Buy the ETF and borrow against the ETF, not the actual underlying spot Bitcoin, which the ETF, of course, will have to own. And number 3, I think that Bitcoin is increasing its adoption rapidly, and it's more and more seen as what it's supposed to be, which is a reserve asset. It's more and more seen as that. It's more and more understood as that. People who are, selling and spending their Bitcoin are being mocked, as they should be. You are telling me that you have finally got your hands on the hardest asset humanity has ever created, and you want to exchange that for a piece of a painting? It doesn't make sense. It doesn't make sense. Spend and replace is about the closest thing that comes to it. But if you're going to spend and replace, why don't you just forego the shit you were going to buy and just add more Bitcoin? Right? That whole local economy thing, it doesn't work for me, especially when you know that the person you're buying the product from is probably going to sell it to pay for their living expenses. So I don't really care about that, right? I don't think that's the right thing to do at this moment in time. You got people with a few $1,000s of Bitcoin being tricked into buying pieces of art or buying mugs or buying whatever the hell else they're buying just for the sake of helping the Bitcoin economy. And you got people with multi-billions of dollars of Bitcoin holding on to every single Satoshi that they can grab. There is a difference in mindset here. So based on those 3 things, finality of supply, multiples are tighter, and Bitcoin increasing its adoption rapidly, I think it's safe to say that Bitcoin would rally much harder than gold. So then you have to think about, well, what could the price effect be on Bitcoin? Because think about it, right? If you're watching this video, you're probably thinking about investing in Bitcoin. If you're not thinking about it, then you're all into Bitcoin. It's one or the other. You have to start thinking like an investor, because if you have not invested into Bitcoin yet and you're watching my videos, you're probably someone who has other assets. You're probably someone who's thinking about their future, and you need to evaluate, okay, so what are the chances of Bitcoin going to 0, and what are the chances of Bitcoin going to $1 million? What has a higher likelihood, right? And then you can make an assertion on which which direction you go in, what size of allocation you have. And we can safe to say at this point, considering the government regulation that's coming in, considering how supported it is by big finance, all of these things, I think it's safe to say that the chance of Bitcoin going to $1 million is higher than the chance of it going to zero. So the most dangerous position to be in is 0%. So you need to get some Bitcoin, right? However much percentage you get into, we can argue about and debate, but you need to get some. You need to get off zero. So let's think about how hard this could rally once an ETF is approved. If it took $1.6 billion to move gold's market cap by 1%, and it takes Bitcoin just 93 million, I was just thinking, I was like, let me just do some approximate maths here. Or for my American friends, math. This is not a deep dive study. This is just back in the napkin working out what could happen to the market price of Bitcoin, right? So what this means is that Bitcoin could rise by 76 times more over the same period, not taking into account the finality of supply. Why is that? It's very, very simple, right? If Bitcoin has if gold rallied 350%, right? And Bitcoin has a 1 to 118 multiple based on Bank of America study, you just times that gain, and you're looking at 76, right? You multiply the gain and you're looking at 76 times more over the same period. And I took a cut down on that. So, right, I haven't priced it at the exact multiple that B of A says because it's crazy and people don't like to believe it. So I've reduced the multiple and you're looking at 76 times more. So I'm assuming that it goes up percentage-wise the same as gold, and then adding the premium and of the multiple that Bitcoin currently has onto it. So gold went up 350% in 8 years, and if a Bitcoin ETF is approved, let's say the price of Bitcoin is $40,000 when it is approved, that 350% would equal 140,000 over that 8-year window. However, you've got to add in that multiple effect. You got to times that by 76, and then you get $10.6 million per Bitcoin over the same period. If the same amount of capital goes into, or rather, the same gain in terms of percentages happens in Bitcoin, and you know how easy 350% in Bitcoin is, because if you've been looking at, all you got to do is look at any chart. You can see how easy that is, and then add the multiple in, and you're looking at $10.6 million per Bitcoin. When I saw that, I was blown away. This is just the ETF. This is without any countries getting involved, without any high net worth individuals buying and holding in ways that we don't know. This is assuming that a lot stays the same, which it absolutely will not. It will not stay the same, right? And it's also without 20 plus other considerations to Bitcoin's supply tightening due to demand not even, due to the demand not even being looked at, right? And I also think that supply constrains further as the price goes up and more financial facilities come up to generate the liquidity without selling. So, if I've put $100,000 into Bitcoin and it's now worth 25 million, it doesn't make sense, and I live in the UK or the US, it doesn't make sense for me to sell that, right? I'm assuming this is in the ETF, right? So I've put $100,000 into the Bitcoin ETF. It's now worth 20 million. I'm not going to sell that because I'll have a taxable event. So what I'm going to do is borrow against it. I'll borrow $1 million against it, right? There's no chance of being margin called at this point. There's no chance of none of that. I'll borrow $1 million against it at market interest rates, live off of it, completely tax-free moment and event. And as the price goes up, I pay the loan off with depreciation on the price. It's just very, very simple, right? Just keep refining. Refi. So I think that the supply, the supply constrains further as a result of this. Because a lot of people think that as the price goes up to $1 million, there's going to be a flood of this Bitcoin hitting the market. Sure, there'll be some people that sell, but there'll be the inexperienced investor who doesn't know how to generate liquidity on an asset that they want to hold. But now you've got the buyers coming in who are experienced and who have the connections to make that happen. So as that goes along and as that Bitcoin turns over from inexperienced investors to experienced investors, the only thing that we can expect is that the supply constrains further. Ultimately, what you realize here is that nobody is truly ready for true scarcity. True scarcity. No one is ready for it. And that's why, part of the reason why I'm doing this YouTube channel, right? Because people like my parents who have been in real estate for so long don't understand that they maybe need to get into a small portion of this asset until I sat down and explained it to them. So this video is designed, and these videos, the ones that I'm doing, are designed for people who are trying to contemplate, okay, well, I've owned a bunch of real estate, I own a bunch of equities, you know, do I really need to add some Bitcoin into my portfolio? And the answer is yes. But you need to understand why, what the opportunity is, how it could work out. So that's why I always ask, please subscribe to the channel, because the way the YouTube algorithm works, the more subscribers you get, the faster you get the subscribers, the more they're going to show the video to new people that are sitting there melting their melting their value away in their property portfolio, which has not shown a new high since, you know, we've not breached the 2008 value in real estate, in real value. So what I'm going to do here is I'm going to put the link to the tweet in the YouTube description so you can go and look at it and see the math that I spoke through, and understand and revert to it and see if you have any questions about it, and please comment on that. But other than that, everything that I'm looking at here just tells me to follow the 3 rules of Bitcoin, which you guys must know by now if you watch more than one of my videos. The 3 rules of Bitcoin are: step number 1, you buy Bitcoin; step number 2, shut the fuck up; and step number 3, you get fabulously wealthy. Have a beautiful morning.